one of the things that we want to talk about tonight is high-end deals in uncertain markets. High-end deals in uncertain markets. So I'll tell you, I was talking to a newer investor today, and one of the things that they said is, you know, Shanoa, the strategy that I'm looking at doing is I just want to do fewer deals. I just want to do, you know, higher end deals. I have this eye for design, right? And I live in a high-end home, and instead of doing, you know, $100,000 or, you know, that's, you know, $300,000 deals, I want to do just a few multi-million-dollar homes. What do you think about that strategy? Same effort, more money, right? It sounds exactly right? And I think that's what they're thinking. But what's the truth behind this? What's the truth behind this? Would you guys like to know a little bit of the truth behind this? So the truth is, high end, that is where the big money is, for sure. High end, you can be making hundreds of thousands of dollars on your deal, okay? So just think on $1 million deal, using that same 10 to 15% of ARV in terms of your profit, using that formula, you're making $100,000 to $150,000, right? Depending on your cost of capital. $200,000 deal, you're making $200,000 to $300,000 on your deal, right? Does this sound a little bit better than doing a, you know, Jonathan, a $200,000 deal, right? Making $20,000 to $30,000. The answer is yes. And on these big houses, you know, you can make a lot of money. And you're only dealing with one set of permits, one set of plans, one set of contractors, hopefully one set of issues, right? And only one set of sellers and only one set of buyers, right? As opposed to when you're doing multiple houses in the, you know, low hundreds range, then it's a lot more, there's a lot more work to do, right? When you're marketing it, you know, you're marketing one property, you're putting all of your effort in it. So I think, you know, it sounds good. And as Ed said, it takes about the same amount of time, you know, to sell these houses. Now, typically when you're doing one of these houses, they take a little bit longer to build, right? So there's more to build, but not longer than what it might take 2 houses to be able to go through as a real estate investor. And the funding, as long as you have a great deal, the funding's going to come, no matter what the price of the deal is. Now, I will tell you that in uncertain markets, do you guys, is it just me, or am I in company here thinking that we're in a little bit of an uncertain time right now? Is anybody feeling that way? You're seeing interest rates rise, you know, hearing a bunch of news about the economy, you know, that the Fed chairman's raising interest rates might accidentally send the economy into a recession. I don't know. I don't know if you guys are following the news there, but it's a little bit kind of scary, right? It's uncertain times. We're dealing with maybe a war, you know. We're dealing with the supply chain issues from that war. We're dealing with higher gas prices. We're dealing with people who have lost anywhere from, you know, 20 to 60% of their investments over the last 6 months, right? As we've seen some indexes crash. And here's what I'll tell you about high end during uncertain markets. The months of inventory can double overnight. So basically what that looks like is, hey, you're not the only one who thought to themselves, let's just do these multi-million-dollar deals, right? There's more than just you out there. So what you'll see is some of these will all come online at the same time. And as that inventory doubles, and if the market comes to a screeching halt, and we're seeing some significant slowdown in the market right now in terms of the number of sales, and I'll share that with you as we do the market update in a little while. But what you'll notice is that your holding time can double. And when your holding time is doubling, what is that reducing? That would be your profits. That would be your profits, right? For every day you're holding that house may be costing you several hundreds of dollars every single day that you hold that house. And then when I say months of inventory, just to kind of give you guys some idea of what this looks like, is right now months of inventory in Texas around 2 months of inventory. Historical months of inventory, what is a stable market or a market equilibrium, somewhere around 6 months supply of inventory. So we have very little inventory right now, but the inventory has been growing significantly. In fact, in some markets around Texas, we're seeing like a 50% growth in the amount of inventory, and in other markets, we've seen like a 200% growth in the amount of inventory. Now, that gets them up to a 2-month supply of inventory, which sounds like, okay, well, that's still doable. But the truth is that it's like it happens gradually and then all of a sudden. And then you can't get out of some of these high-end deals fast enough is what you can be aware of. In fact, a high-end deal that we did in 2006, the market, some of you guys might remember, 2007, 2008, just basically grinded to a complete halt. And in some of these $1 million price sectors, we saw months of inventory go from a few months of inventory to 36 months of inventory. 36 months of inventory. Can you imagine holding on to a multi-million-dollar house for 36 months? How's that going to work out for you? How's that going to work out for your profits? It's not. Is your lender even going to hang on with you for 36 months waiting for you to sell that property? No. What's your lender going to do? What did a lot of lenders do in 2008, 9, and 10? They foreclosed, right? So just be aware that that happens, and it's like it almost feels like it's fine. So it's like fell off a cliff. So gradually, and then all of a sudden, sometimes these things hit you. And I will tell you this, and I walk through so many houses. When the market is undersupplied, anything and everything sells. When the market is undersupplied, anything and everything sells. When the market is oversupplied, the cream rises to the top. And some of the crappy or shoddy or, the contractor kind of got away with this, they're looking at everything. Why? Because they can. Because they have options and because they have time. So what I will say is when we are in uncertainty, right, or recessionary times, or a housing market decline, I will tell you this truth, and that is that the high-end properties drop the hardest, and they drop first. So they're typically the last part of the market segment to go up when the market goes up, but they're typically the first part of the market segment to go down when the market goes down. That's just the law of real estate, and real estate, that is law of real estate. Condos are also what we call the canary in the coal mine. Condos are typically the last segment or last asset class to go up when the market goes up, but the first asset class to go down when the market starts to go down. So those are the numbers that you'll want to look for. Now, months of inventory, where can you find that piece of data? Your realtor will give you that months of inventory. Now, here's what I see a lot of people get confused on, and now more than ever, this is a confusing market, is what they'll do is for a lot of brand new investors, they don't understand the concept of months of inventory, but they understand the cousin of months of inventory, which is what? Days on market. So they'll look at days on market and they'll say, oh, well, for all of these properties that sold, they were only on the market for 30 days. That sounds really good. I'm going to make a lot of money if I sell this property in 30 days. You could have 30 days as your days on market, and you could have 6 months as your months of inventory. Do you understand that? Remember that days on market, that's how long a property is on the market for the lucky ones that actually make it to the finish line and sell. Months of inventory represents all of the sellers that are out there, including the ones that will ultimately expire or get withdrawn. You guys kind of understanding this difference right here? So don't just look at days on market. Days on market when months of inventory is going up will throw you off and cause you to make maybe not the best decision in terms of understanding your numbers, in terms of understanding your holding time. So I want to make sure you're aware of this. Now, let's talk about what we've gone through over the first 6 months of 2022. 2020, we dealt with some stuff, right? We came out on top. 2021, man, that was like the best year real estate had ever seen. 2022, the first 6 months looks like a bear market. Bitcoin down 59%, the NASDAQ down 29%, the Dow down 15%. How many of you guys felt that in your savings? How many of you guys felt that in your 401ks, right? And then have we seen an inflationary market? Price of gas, right? Even if you don't have a 401k, I know you're feeling the price of gas, right? There's no one in here who's not feeling that, right? Food and commodities and restaurant bills. We got back from a vacation, and we were talking on the way here tonight. Is like, did you notice like how expensive everything was while we were on vacation? I thought we were going to Mexico. We went to the Cabo part of Mexico, which is probably like a translation for Cabo is like the most expensive place you can go in Mexico. I don't know if you've ever looked up that translation. I think that's pretty much what it is. That's a joke. You can laugh until you get the bill, and then you can cry. So food's gone up, the cost of other commodities have gone up, so we've been seeing that. So at the same time, we feel less rich, right? Because our stock portfolios have gone down, but we're paying more for everything right now, so it's kind of a double punch. Job market, some employers are starting to fire and shutting off their hiring as well. And then the consumer sentiment, right? So and it's often measured as a consumer confidence ratio. So I think right now it's around 100, but I think it topped out around 130 earlier this year before we went into that bear market. So I feel less wealthy and things are costing more. Is that kind of how maybe you feel right now? So this contributes to this uncertain time. And then when you feel uncertain, does that lead to dramatic action? Or does that lead to hey, let's kind of wait and see what happens here for a little while? Which one or two? Two. Yeah, I want to kind of I'm just going to sit back for a little while, see what happens, right? So a lot of times people will say, let's hold off on buying a new house, or let's hold off on upgrading that house until my stocks rebound, or until I've saved more money and or the interest rates go back down. I know we have some realtors in the room. Are any of you guys working with buyers right now? Have any of those buyers said, oh, maybe we pull back right now? And as a realtor, you're like, are you kidding me? This is the only time that you can buy a house without making multiple offers above list price the same day it's listed, even before you even saw it, right? That's what you need to be saying. And then the other part of what you need to be saying is, and by the way, they're about to increase interest rates again, so you better go, now is good, let's go lock it now. But then they're uncertain. So that kind of says, I'm just gonna hold back and look. Translation, waste your time for another couple of months until they, just like a lot of the buyers did last year. It's like, oh, I don't know if I want to make an offer. And it's like, well, that's okay. 8 other people already did, and it went $50,000 over list price while you were thinking about it, right? So the same thing's going to happen, just a little different order. The benefit now is you don't have to pay $50,000 over list price. Now you will have to pay more for an interest rate, but those things kind of work out. If you're not paying this much, but if you're going from paying this much to paying this much, even when your interest rate goes from here to here, right? So sometimes we have to kind of walk our clients through these different situations. But that sentiment is real, and the sentiment is showing up in the market report, which is the numbers I'm going to show you in a little while. So as you guys are thinking about the high end, I want to make sure you know some of the things that I want you guys to consider, which is on some of these multi-million-dollar homes. These are not the homes that finish in 6 months, 7 months, right? These are homes that sometimes take 12 months, and in some markets will take up to 18 months, depending on how long it takes to get permits, depending on how long it takes to get contractors, depending on supply chain issues. I've seen more, and I'll ask the other realtors who are with me now. I've seen more pictures on the MLS of houses that are either brand new or completely remodeled that are missing 2 or 3 items. What are those 2 or 3 items? The dishwasher, the cooktop, and or the oven, right? You're like, well, why would they put that in there, right? Because they're still waiting on it, because it's on a boat from China. I don't know when it's going to get here. You're seeing that happening all the time. So know that these higher end projects, you're not just running into Home Depot and buying, a GE off the shelf, right? You're buying a Bosch, dishwasher. It's going to take a little bit more time to get there. So those supply chain issues, those labor market issues, and then, what's interesting is I read an article today that said a lot of people think that in 2022, after the Fed gets inflation under control, that they're going to do what with interest rates? Bring them back down. Who knows? Who knows? Right? But the last thing that you want your buyers to do, any of our buyers to do, is what? Read that article. Because what's that going to do? What's that going to do for the housing? It's going to shut it down for 6 months, right? Because someone's going to think 6 months, I could wait that out. I could hang out here a little bit while longer. I extend my lease. But what's happening with leases right now? Anybody trying to lease a house recently? Yeah, the multiple offers have moved from purchasing houses to leasing houses, okay? So good luck with that strategy too. Anyway, so who knows what will happen? And if you guys decide to go the high-end route, who knows what's going to be going on in the economy, in the world in 12 to 15 months from now. All of these items may be behind us. That being said, we may have a whole new crop of items that might try to come up and punch us in the face, right? And our job as successful real estate investors to be able to dodge these issues. And I will tell you, your job as a real estate investor is also to manage risk. And what does that look like? So a lot of times I'll see new investors who will say, well, I don't want to, hard money lender is so expensive. I don't want a hard money lender, whatever it may be. I will tell you, you do not want a hard money lender when the market is going down. Who do you want? You want a lender who is also your partner. Why do I say that? Is your hard money lender going to foreclose on you after they've extended your loan for 1 or 2 times? They might. Is a partner who is providing the funding going to foreclose on you? No. So it's going to cost you more money, but you're managing risk, right? An insurance policy costs you money, but it allows you to manage risk. So be long-term greedy, right? Don't be short-term greedy, because sometimes being short-term greedy can really hurt folks. So was that helpful to you guys? Was that tip helpful to you guys? So part of what we do is we love to be able to share these tips so that you guys can be more successful in the marketplace and learn from both the things that we've done right over those last 20 years, as well as the things that we've messed up and we've seen other investors mess up over the course of these last few years. And we don't want you guys to be trying to pin the tail on the donkey, right? As in terms of real estate investing, which is put a blindfold on, we'll twist you around and good luck with your investing, right? That sounds terrible. So stick with, hang with, learn from people who have made it in all different kinds of markets. Don't try to figure it out yourself, and we can help with that as what we do as part of Texas REIAs. So you all want to follow in the footsteps of someone who has the exact results that you are looking for, right? Let's just make it easy. Let's hit the easy button. So that's what we like to do as part of our tribe at Texas REIAs. So excited to be able to be on that journey with you guys.